Prateek Agarwal, MD and CEO of Motilal Oswal AMC, with us on the show to talk about his thoughts on markets and the way ahead. Prateek, great having you. Thanks so much for joining in. You know, I wish a lot of people had the calm that you have within you when markets are going through such a period. And I know this tape has played out in the past, and every single point of time it feels that this time it's different. But I'm inclined to ask you, is this time really different, or this too shall pass?
This too shall pass. In that manner, actually, it is not different. Every time it has happened in the past, it has passed. So, to some extent, if we see what is happening globally is not negative for us, it can be quite positive, because just think about it. What is happening is the quest for markets once again. Uh, India is a country with 140 plus crores of us. It is potentially the biggest market of the world. Now, if the ability with our policymaker increases to have our market for our manufacturers, it is very good. It is very good. So increasingly, global leaders are not, let me say, reposing faith in global systems which have been put in place and have survived for so many years. New order is being written, and it seems it is. No, every leader will have more say within its own country, which for a country where the size of population is so large has to be positive. Now, in the interim, there is volatility. Now, one bit of volatility is because our currency seems to be weak versus the dollar, and dollar itself is weak versus every other currency in the world. And so there is a flight of money outside of the US to other markets. All other markets are rejoicing, except last 1 or 2 days. We seem to be not doing as well. Now, what you are really looking for is currency stability at whatever level, but stability, before the global investors start to look back into the country. Else, quarter two earnings were good. Quarter three, the start has been good. Many companies have reported better than expected numbers, reposing faith in the future. So the building block of market that way is pretty solid. Good earnings, lower interest rate, lower inflation. In terms of countries, macros, lower oil also helps. So a lot of things going for us, but a few things which will sort themselves out over, let me say, a few days.
Few days. Okay, that's interesting to know. So, Prateek, uh, does the semblance of a trade deal with the US become very important, or could what the EU chair Ursula von der Leyen said, that the mother of what could be a mother of all trade deals, which is the India-EU trade deal, could that give the whiff of hope, or does it need to have something in the budget to attract FI flows back, which could hopefully get in the flows and stem the fall of the rupee both? Is that the need of the hour? What is more important?
Yeah, so trade deals are good, especially with the West, where we may have some cost advantage in manufacturing. That is our thought. Now, EU is a large market, US is a large market, so a favorable trade deal with these markets would definitely help. Now, we don't have much textile exports into the EU. A deal there can open that up. So, second, when I say currency has to stabilize today, FPIs are probably not looking at us because we seem to not have a trade deal with the US. So, if you see life of various markets, there was a life before the trade deal, and markets were not doing well. And after a trade deal, wherein every market which has a trade deal with the US has done significantly better. So we will hope the same for our markets. Now there are numbers which are floating around. If those numbers come out true, then it shall be very good for Make in India as well. and that should support the market. So, trade deals on the currency side is important. Now, from the budget, what we are looking for as equity investors, that guys will have a different point of view, is maybe when everybody is seen to be having less cash to spend, there is uncertainty in the air. Capex, hence from the private sector, may just get pushed a bit more. Have the government shoulder the responsibility for some more time, and maybe hence the fiscal consolidation roadmap gets pushed a tad into the future. And then if it is, where do we end up spending that extra money? Is the other thing. If it is for nation building, if it is for catalyzing investments into newer spaces through PLI kind of instruments, etc., I think will be positive for the market. Now, dare say, but there is this huge ask on taxation also across levels for investors. Uh, when times are like this, if there is some certainty and at a lower level from where we are over, let's say, a period of 5 odd years, that would be a pretty good signal to global investors. So, those are the things to look for in the budget. I don't think taxation changes should be expected and would happen. But very clearly, incentivization, uh, to industries which can build the India of the future will be very, very keenly watched. So, and of course, there is this new thought which is getting percolated, which is we have kept out investment from one country. The gates are completely closed. Now, maybe those gates open a bit because we need. So, if the manufacturers from there want to come and manufacture here in association with Indian promoters, I think there is a view that that should be now encouraged for technology for getting us capabilities in manufacturing that we may not have. So those are the things to watch for in this budget.
Okay. So, Prateek, couple of interesting points that you mentioned over here with regards to the trade deal. You're talking about what it would mean for the currency and what should be expected from the budget as well, which will probably be looked at pretty closely. How are you seeing that FPI DI dynamic then change? Because sustained FPI outflows is what we've already seen in 2025. You had mentioned in the previous conversations that we had as well that the tide somewhere was turning on this front. Uh, how critical would it be for the rupee to stabilize for the FPIs to come back?
No, so it is critical because if you are looking at a possibility of a further decline in the currency, obviously, if you are sitting with monies offshore, you will want to hold back. Very simple. Now, in FPIs, there is a type which we say hedge funds, who run levered books. For them, rupee volatility can kill. So, that kind of activity would not commence as well. So, rupee currency stability, so level is not important. Stability is important. I keep saying that. That is the first start point. Now, I think we have sorted a lot of issues over the past 1 year. We are not amongst the better performing nations. So, what it has done for us is to correct the relative valuations versus a lot of other countries. We are no longer the most expensive market in the world. Two other markets have that crown. Our premium versus emerging market average is now lower than the 15-year average, so that also helps. Maybe what is happening is that there is some amount of momentum play. We are a market not really performing strongly. And if others are performing very strongly, then the pressure to sell a bit more in India to go there is there because we are a large emerging market, so a large part of somebody's portfolio. I think some bit of that would continue to happen, and we are then looking for an event. If we want a turnaround in a short period of time, then we are actually looking for an event that can do it. So there you are right. It can be a budget, it can be a trade deal, or both, which will shake investing people globally to have a relook at India. And when they relook at India, there is a lot going for us. We are not amongst the better performers. So valuations have corrected. We also have a lot of growth spaces. We are the fastest growing large economy and very, very long runway of growth. So once this tide turns, the up move can last a while. Is the thought. Else, if we don't get what we are looking for, the two events that we are talking about, it shall sort, but it will take longer. Is the sense. But today there is a lot going in our favor. A good deal, so we are talking of two, at least one will happen. A good deal will cause people to look at us and change sentiment.
Got it. So, Prateek, if you have to look at 2026 as a year, you have mentioned earlier that there is a structural shift happening when it comes to IT earnings. There is moderation there. You have been positive on NBFCs versus the banks. And three, beyond the existing themes, you have been talking about emerging areas like the circular economy, data centers, etc. From all of this now, with the way Q3 numbers have panned out as well, what would your top three bets be in terms of sectors for 2026?
We continue to be positive where we were positive. So the growth themes continue to be the same. We are growth in earnings focused investors. They haven't changed. Now, just to make things clear, 24 was the year wherein a lot of these themes worked in this country and globally. So we were like what was happening globally. 25, the same themes worked globally but did not work in India. Maybe the reason was that FPIs were such strong seller here. 26, if we see intensity of FPI selling reduce, the linkage with the world and the thoughts of the world will again percolate into the country, and the themes could then be similar. So stuff like defense, renewables, EVs, etc., which are plays globally, new tech, digital, etc., would all again start to do significantly better if FPI selling reduces over a period of time. If it does not reduce and we get a year like last year, I think the themes of last year, which were very different, may continue to do well, and those were basically close to the index kind of spaces. So this is how it is with correction in valuation, with global interest rates being brought down, with liquidity getting increased. I think chances of us doing well over a period of time is high. The worst performing market of 1 year typically is not the worst performing for 2 years in succession. It's never happened to us before. So in terms of probability, things changing for the better is very high. And if markets do well, then the growth themes should be expected to do very well.
Let's hope the tough times pass sooner rather than later, because right now the bind that some of the trading community is in is unreal. But thank you so much. I love the way you started off, that this too shall pass. We'll wait for that. Thanks so much for taking the time out and being with us today, Prateek.
Thanks.